Hi there, welcome to Kneppy Invest, and welcome to another answer and reply video. I had planned to do a few shorter videos during the past week because last Saturday my answer reply video was quite short because I was working that day, but I just didn't have the time to do any videos and I just didn't feel like doing it. So I am falling a little bit behind in answering your replies or answering your questions or just doing whatever. And I am going to go back to the last reply or comment I did reply to, which was about 12 days ago. And I will finish this video answering or replying to these three comments from Darren 494954. Three really interesting, possibly even thought-provoking comments, possibly constructive criticisms. I'll wait until I decide whether they are constructive when I do discuss these comments at the end of the video. But let's go all the way back to the last comment I did reply to, which was about 12 days ago. And that comment, my last one, was Anderson in regards to palladium. Here it is, palladium. So the first question I have today to answer is around Laserbond. Looking good value, Laserbond. Now, I have been a shareholder of this company and I decided to sell out. And the main reason I decided to sell out was just a technical reason. It was looking fairly weak on the chart. And I just went, look, I might get back into this company if it starts looking good technically wise. But at this point in time, I did see a little bit of weakness, particularly when they released their results in February. And the market just has a bit of negative sentiment around this company. So I thought at this point in time, I have no idea how much further share price has to fall. I could take the argument there is some value here, but whether there is value or not in this company is relevant just because of this particular chart. And even if you go back further, look at the weekly chart, the share price has really been doing nothing over the past few years. So I really want to see some sort of breakout in the share price and a return to positive sentiment and some good financial numbers from the company. So I'm still hopeful. I wouldn't say bullish about this company moving forward, but I definitely will have Laserbond on my watch list just to see how they perform. Now, if you do look at the financial performance of this company, it has been growing over the past few years, but I think the last half was a little bit weak. So this is FinChat, and this is revenue, yearly revenue. But if you just look at the semi-annual revenue, and yeah, flat. So I just want to see revenue returning to growth. And even if you look at the income for Laserbond, fairly flat over the past few years. So the margins have been going down as well. So with a market cap of about 75, 80 million, I don't think the valuation is too stretched here, but I think the market and myself just wants to see a little bit of growth moving back into the company. And if we do see that, or if the company can provide that, I think it's full steam ahead for this company, but I need to see proof right now. And that's just one of the little shifts I've made in my investing is for these smaller cap companies, I do need to see a good technical or good chart, I suppose is the best way to say it. I need to see a good chart. And when I looked at Laserbond, it was just a fairly bearish chart. So that is Laserbond. Thank you, David Giblet. Infinity says Maganese seems to be having its time in the sun due to some supply deficits. Could be worth taking a look. JMS, which is Jupiter, seems to be a beneficiary. So JMS did a capital raising. Jupiter Mines did a capital raising. Was it a capital raising? No, it wasn't a capital raising. It was a sale of Jupiter shares by AMCI Group, and the market had a little bit of a hissy fit about that. Apart from that, the chart actually looks pretty good, and this was a potential buy the dip opportunity for Jupiter Mines, and actually did take a small position in Jupiter Mines just on this chart. And because of these tailwinds behind Jupiter Mines right now, whether it's going to play out in the end, I have no idea because this is a mining company. But definitely turn around in the sentiment and the trend in the share price for Jupiter Mines. What's happening there? There we go. Anyway. So thank you, Infinity. Check out VMM and BRM for a breakout. I have no idea what those companies are. So let's have a look at VMM. What was the other one? VMM, Viridis Mining and Minerals. So this is just a chart. Oh, this is the weekly chart. In fact, let's have a look at the daily chart. Oh, to be fair, the daily chart looks okay. I wouldn't be. Yeah, that's a nice little breakout. Really nice breakout back in. When was this? The 1st of July last year. That was a beautiful breakout. You can just see the share price. It was an all-time high, maybe, or long-term high for anyway. And then the share price really didn't fall for the next 4 days. And that was actually a really good breakout for Viridis Mining. Other than that, I don't know anything about this company. And honestly, the chart looks pretty good. I wouldn't say this is a breakout now because the share price has been in uptrend for quite a while, maybe 9 months or so. Markup 79 million. I'm assuming this is an exploring company, mining exploring company, coal assets in Indonesia. I'm trying to stay away or more away from exploring companies. It probably has been one of the weaknesses I have in the past, and I'm not an expert in this area. And sometimes I do get overly seduced by good-looking charts, and the sentiment in these companies can turn quite negative pretty quickly. So that's my own personal preference. And BRM, I'm assuming this is another gold exploring or some sort of exploring company. It's definitely not Bristol Myers, unless you are talking about Bristol Myers Squibb. And there's a lot of Bristol Myers Squibbs here, but maybe it's the wrong ticker code. BRN. I'm assuming that's the wrong ticker code because I see no BRMs here that are listed on the ASX. There is a BRM on the New Zealand Stock Exchange, a fund ETF, apparently, Barramundi Limited. There is another Barramundi. So I'm assuming that's the wrong ticker code, unless you really want to talk about Bristol Myers Squibb. But let's not talk about that company because that share price and the chart of that company is pretty weak, I'm assuming. Yeah, well, that's more than weak. That is an horrendous chart for Bristol Myers Squibb. It seems like Bristol Myers Squibb is listed on numerous exchanges. Anyway, thank you, Blacktop Images. VMM does look interesting, and BRM, no idea what that is. Are you talking about BRK, maybe? Bill Wilkinson says, what do you think of Poe Energy PVE recent insider buying and up from its lows? PVE did come onto my radar simply because at least the last quarter, they were operating cash flow positive. So it did enter my possible top 25 March quarterlies. And let's have a look at the cash flow report for the March quarter. And what you notice when you do have a look at the cash flow report, not a lot of spending. So only $1.2 million in receipts. In fact, it's not dollars, it's euros. 1.2 million euros in receipts. And operating cash flow positive, 874,000. So not a lot of spending this company is doing. And cash on hand grew from 1.3 million to 2.1 million. So really interesting quarter from the company. And you notice all these change of directors' interest notice. That's what Mr. Bill Wilkinson was mentioning, insider buying. I think that might be from the CEO or the managing director. Kevin Bailey, AM, bought some shares, $31,000 worth of shares, and I'm pretty sure even the one previous to that were directors buy. Kevin Bailey again, $26,000 worth of shares. That could be a good sign. I'm just going to have a quick look at their January Appendix 4C. So we have to go back 1 year, not 3 months. Here it is, because I had similar receipts this quarter. I'm just going to see if they were operating cash flow positive again. And they were. So $1.3 million in receipts and operating cash flow positive $940,000. And it seems like they have just gone into production because receipts for the year to date, which was 12 months, just over $2 million. So just based off this and increasing cash on hand, what are they going to do with that cash on hand? Increasing cash. And that's probably the most important job management have to do, capital allocation. So, yeah, it does look interesting. So the next thing is having a look at the chart. And I think Bill Wilkinson did mention the chart. Something about the chart here. Up from its lows. Okay. Now, just based off this chart, I wouldn't be necessarily all that interested just yet. Share price still in a downtrend, still lower low, lower high, but market cap $45 million. But yeah, that's probably the only negative thing I can see right now is just the chart is still looking fairly weak. So otherwise, a company to put on your watch list. And I don't think I have this company in any of my watch lists. I don't. So I think it's time to put into one of my watch lists, and I might put it into small producing mines. There we go. That's Po Valley. Does look interesting apart from the chart. Kneppy, do you like Cyclopharm CYC? Looks like a potential one, but technical looks so bearish. Cyclopharm. So let's have a look at the chart first. And I'm pretty sure this company did a capital raising recently. I could be mistaken. Not the biggest. I don't know much about Cyclopharm. So let's have a quick look at the company CYC. And I don't think I've done any research, or if I've done research on this company, it's been very limited. Yeah, there's a capital raising on the 24th of May. So what's today's date? 25th of May. That was yesterday. There you go. They've just done a capital raising. And I would call this company maybe a medical, some sort of medical company, equipment company or something like that. Technagus, that does actually ring a bell. Technagus, this company does have revenue, but I don't think the company is profitable just yet. And they're talking about expanding into America or North America, because it's mentioning Canada right here. Also, although it says Canada is Cyclopharm's largest single country market to date. So maybe they're just expanding to the United States and they've already expanded into Canada. So let's just have a quick look at the company's most recent financial data. Very quick look, I suppose. And so they're not profitable based off this. Markup is about 150 million. So there is a little bit of price. There is a little bit of, I wouldn't say premium price into the company, but I'll say maybe a little bit of expectations already priced in the company with a markup of $150 million, yet the company is not profitable just now. And this is Cyclopharm's biannually or semi-annually revenue and net income, and they have not been profitable. They were profitable a few years ago on a half-yearly basis, and it does look like revenue is slowly growing higher. But the last half was fairly weak. Revenue was the lowest it's been for a few halves. And of course, the last thing to do is the chart. And the chart does look negative. And there was a definitely shift in sentiment back in October last year after a really nice run up in share price. And they've just done the capital raising. So at this point in time, the chart looks weakish, and I would be out of this if I wouldn't be buying this right now. I'd probably be waiting for some signs of the turnaround in the sentiment in the trend in the share price. But otherwise, I don't know much about the company. That's Cyclopharm. Someone holds CAF. Is that Centrepoint Alliance? I did, talked about Centrepoint Alliance in a recent video. So let's have a look at the chart for that company just to see if I remember what it looked like. And I was like, yeah, that looks okay. Markup 50 or $60 million. So Centrepoint Alliance, and this person likes it. Jeffrey Irving likes Centrepoint Alliance, and a company I never did any research on. And I remember coming away from that thinking, oh, this is not as bad as I thought it was going to be. Any comments on CAY? No, not right now. So let's first have a look at the chart. Oh, I'm assuming this is a mining exploring company. Canyon Resources, and the chart looks okay. It looks like it wants to break out, doesn't it? If you just expand this daily chart, looks like it wants to break out. If we have a look at the weekly chart, now the weekly chart looks a little bit more negative. Goes back all the way to 2011. So yeah, the daily chart looks okay. Looks like it does want to break out, or is trying to break out. Markup is $110 million. There you go. So even though I've never really taken a look at this company, still has a markup of $110 million. And let's just have a look if they are a producing mining company. I'd say no. In fact, you can sort of tell just by the first page here, because they don't mention anything about production. They're just talking about exploration program and drilling ongoing. I am not an expert in this area, so they are burning through cash. And the first thing I'd want to know is what they're doing. Bauxite. There you go. And to be honest with you, I'm trying to stay away from, I think I've already mentioned this, trying to stay away from these mining exploring companies because we just don't know. The only way I would buy these sort of companies is if I do see a really strong technical signal. And this does look okay. But even then, I would be hesitant buying on a technical signal because it's mining and bad things can happen to mining companies for any reason, and some of those reasons are completely out of control of the management. But chart looks okay. So if you do like the company, yeah, chart actually looks okay. I love the videos. Would appreciate hearing your thoughts on Betmakers. Okay. Okay, yeah. Betmakers. The only reason I'm looking at Betmakers is because, firstly, they had an operating cash flow positive quarter last quarter, first one. And that was the same thing with PointsBet. And I think may also be true for Bluebet. So possibly the company has reached a very important inflection point, and that is operating cash flow positive. Now, Betmakers is different than PointsBet and Bluebet. They're focused on betting, but pretty sure Betmakers provides software, stuff like that for betting agencies, something like that. So they're not really in the same, as doing the exactly same thing as PointsBet and Bluebet, but I probably would prefer this company over the other two. And the other thing going for Betmakers right now, I might just quickly show you the Appendix 4C. I think Betmakers didn't quite make it into my top 25 because I just want to confirm this was an inflection point for the company. And I just want one more quarter to confirm that. And I think the market is even not quite convinced just yet. But if you are convinced, maybe now is the time to think about buying into Betmakers. Okay, so here we are. Here we are. So receipts to customers 27.5 million, and operating cash flow positive by over $1 million. Now, they did spend $285,000 on property, plant, equipment. So they were also free cash flow positive, and cash on hand did fall. And the reason cash on hand fell was because of this other. And I'm not a big fan of other. Provide details if material, and predominantly relates to the movement in customer funds held, customer funds on deposit in relation to Global Tote Hub and ADW operations. The restricted cash balance at 31st of March 2024 was 11.1 million. So not sure about that, but otherwise they were operating cash flow positive. So the next thing is the chart, and this is the chart. Well-defined downtrend. No reason to be even thinking about buying Betmakers from sometime in 2021 all the way through to recently, because the share price, well-defined downtrend. It's pretty obvious. But does look like sentiment is shifting around this company, and I think there is possibly even a signs of a turnaround in the trend. Now, even after the company did raise their Appendix 4C, share price has pulled back a little bit, or at least going sideways. So definitely keeping a close eye on Betmakers chart. And if the market sees another really good quarter, in fact, if operating cash flow actually expands, if the receipts and revenue expands, this could be a nice little play. Markup $113 million. So this is definitely a possible turnaround story. Betmakers, definitely put this company onto your watch list. Doesn't mean it's going to happen, but definitely one to have on your watch list in case it does start turning really positive. Thank you, Max IQ3VI. Adrian Seren says, thanks, Michael, for the information insights. Any thoughts on WIA and McMillan Shakespeare? WIA, I don't know much. Currently hold both, but sold some McMillan Shakespeare recently, but now looking to top up. So W1A, I'm pretty sure this has popped onto my radar lately, gold. And that's probably why it's gold company. I'm assuming this is a gold exploring company. So let's have a quick look at the cash flow report. And you've already know that I'm trying to stay clear of exploring companies. And of course, this is taking ages to open up because it's stupid ComSec. And let's have a look at the chart. I'm pretty sure this is a good looking chart. Yep, this is a good looking chart for WIA Gold. A beautiful chart. Probably the only negative thing about this would be volume. Probably would like to see expanding volume as the share price rallies. That is what you should see. Expanding volume as the share price rallies. In a downtrend, what you should be seeing is decreasing volume in the downtrend. And when you see volume starting to increase in a downtrend, that could be a sign that the bottom is reaching. But at this point in time, I'm not seeing that expanding volume. So I am assuming this company is an exploring company. And let's have a look. Yeah, you can just tell straight away. They're talking about grades, inferred mineral resource estimates, all these drilling results, but not talking about any sort of production. So if you go right down to the bottom to the cash flow report, 0 cash receipts, yeah. And only burned through $253,000 in operations, although they do say exploration and evaluation 2.7 million. In my opinion, that belongs in operations because that's operations. I don't know, maybe that's just me. And how much cash do they have? $3.9 million of cash at the end of the quarter, so dropped $3 million. So they probably have to answer Section 8 because they only had less than 2 quarters of funding left. And does the entity expect that it will continue to have the current level of net operating cash flows? Yes. Subsequent to the quarter's end, they did a capital raising. There you go. To raise $16.9 million. There we go. So they have enough cash for a little bit more, a little bit longer. So that's W1A. Don't know much about the company, their explorations, but the chart looks pretty good. This is a gold exploring company that looks better than the other few I was following. What was the other few? I was looking at Pack Gold. And that looks still really weak. And the other one was it EMR? No, it wasn't EMR. No, it was ERM. Is it Emerson? No, that wasn't Emerson. It was Rox Resources. And that hasn't, so looks like based off some of these gold exploring companies, and it's only a small amount, there's probably 10 times more on the ASX, maybe even like 50 times more. W1 or WIA Gold definitely looks the best. Now onto McMillan Shakespeare. And this is in the novated lease area. Oh, chart looks, it's all over the place, isn't it? So if you do look at the longer term chart, so if this was more of a longer term play, even the longer term play, this is a weekly chart, doesn't look that good. So maybe the monthly chart looks better. Well, over 20-year period, share price has gone up, but a lot of volatility in there. I'll probably say this is more of a trading stock, just based off this. I still remember back in, was it 2013? When there was a possible change in regulations, share prices of McMillan Shakespeare dropped something like 40% in one day on fears of that. That was a really good time to buy into it because the share price has barely been lower since, apart from COVID-19. And otherwise, from COVID-19, share price has gone up. But otherwise, I don't know. I don't know this area. And the one problem in this area is just regulation and changes in government regulations, that sort of thing. And you can just see the share price has been so volatile the last year, or ever since August. It's been up and down. Definitely when the share price gets to $22, we have definitely weakness. And maybe that's the way to play it. If share price drops to, say, $15, that could be a buy. That was the lows we saw back in October. Market 1.2 billion. P ratio 34.89. I wonder how accurate that is, because another one, what's the other one? SG Fleet, is it SGF? Yeah, SG Fleet, P ratio of that company, and this is a really probably bad way of doing it. P ratio of this company is 13.05, and the chart actually looks better for this one as well. And the other one was Smart Group. Smart Group chart looked absolutely brilliant until recently, and I think it's just gone negative. The P ratio of this one is 17.5. So I don't know if that's the best way to look at these companies comparing P ratio. It's a very what's the word? Not raw. It's a very rough way of comparing companies, but I suppose comparing similar like companies might be okay. But there always could be one-offs in some of their results, which could skew their results for 1 year. But based off the charts I just looked, SG Fleet looks the best. Fleet Partners, which is another one, Fleet Partners, they had results recently and the share price tanked it, but this could be a buy dip situation for Fleet Partners. P ratio for this one is 11.25. So possibly the best one out of the 4. Anyway, again, I'm not the biggest fan of these companies, again, because of regulations. And all 4 companies, if I remember correctly, have touted the benefits of electric vehicles, and there are tax benefits for purchasing electric vehicles, novated lease style. I don't know, but that's what I have heard. They have been benefiting from electric vehicles. Recently, about now, looking to top up. Yeah, maybe. Thank you, Adrian. First, yeah, whatever. Prisha, so sick Derula. Love the videos, detailed. Really detailed. Appreciate if you have a look at DRE and share your thoughts. Thanks in advance. DRE. Dreadnought. Oh, okay, straight away. No way. Share price 1.7 cents. It's getting towards a point where I would not even think about buying a company. So if share price gets below 1 cent, I'm completely out. That's one rule I do have. Steadfast rule, share price below 1 cent, no. So I do have a company, share price 1.2 cents. That's Brookside Energy. I think that might be it. Other than that, that's my one company I will have holding above 1 cent. But this one, the chart just looks absolutely horrible. Again, I think this is an exploring company. Instead of looking at training view, let's have a look at their announcements. Dreadnought. They just had an investor webinar presentation, only 2 pages long, talking about gold and silver. So they're in the right space, it looks like, but I'm assuming this is an exploring company. So let's have a quick look at their cash flow report. And receipts from JV partner, 480,000. So they are getting receipts from a JV. Government grants and tax incentives, it really helped them. So they were operating cash flow positive this quarter, but take away the government grants and tax incentives, they were negative, and they also spent $1.6 million on exploration and valuation. And again, I think that belongs more in the operational side of things, but that's just me. Cash on hand, 3.2 million. So they have enough now. That was thanks to the government grants and tax incentives. But other than that, I have no interest in this company just because of the chart. If you have a look at the weekly chart, share price was as high as 15 cents in 2022. Now it's struggling to stay above 1 cent. Dreadnought. Again, this is another reason why I just want to stay away from mining exploring companies, because what caused the rally in the share price back in 2022? And you can just see it just came to an end. And since then, it's just been selling. So that's just me. But if you have more insight into the company, maybe you know the management, maybe you know what they're exploring, maybe you're very bullish on that, yeah, you know way more than me. And you're probably more of an expert, because I'm pretty ignorant on Dreadnought Resources. For this company, I just look at the chart. Hey, Debbie, I just watch your videos daily. Great insight. Any chance you could share your thoughts on ENR, please? Drilling for niobium. And I learned about niobium just the other day. Niobium. I don't even know how to pronounce it. There you go. ENR. I will check it out. So again, this is another exploring company. So ENR. Can't even tell you what this company is called. Encounter Resources. I wonder how they got the name for Encounter. Also, talking about copper here, which is interesting. Let's open up their Appendix 5B. And this might take a while. So let's have a look at their chart. ENR. Encounter Resource. So straight away, you know, if the chart looks negative, I'm going to say completely away. Daily chart is all over the place. I would like to see some really good volume coming in. Not great volume. Weekly chart looks okay, but still a lot of volatility in this company. Share price went from 12 cents to almost 60 cents in a fairly short period of time in 2023, and then fell all the way back to 22. So probably a little bit too volatile for me at this point in time. And again, it's an exploring company, and I have no idea the future of niobium. Here we are. Copper, niobium, rare earths. Is REE rare earths? I'm assuming it is. Yeah. So last thing I'd like to look at is, do they have any cash? Are they going to do a copper raising soon? So they're not burning a lot of cash, but again, exploration and evaluation, $1.1 million. cash on hand is still $6 million. So enough cash on hand for at least 4 more quarters. So otherwise, what's the market cap of this company? $178 million. So it is actually valued quite highly. So that's all I got on Encounter Resources. And probably the best way to talk about these sort of companies is if you know a geologist or if you have any sort of expertise in geology, that's when or who you should be talking to, because I have no expertise in geology, no expertise in looking at drilling, and the only reason I'd buy these companies if I see really good positive sentiment behind the company, and even then I would be a little bit wary. A little bit wary. That's just me. A little bit wary about these companies, because you just don't know what the future is going to hold for these mining exploring companies, and even the commodity they're mining for could see a significant downturn in the future. Thank you. Thank you, Breaking Golf. Thank you, Nice. How far down this list is Fiducian Group from Joshua? So the 5-1. I believe Fiducian was in the top 20. Top 20. I believe it came 18th. I can actually tell you right now. Fiducian came in at number 18. There you go. Fiducian came in number 18, and I am a shareholder of a Fiducian. It's a long-term holding, and I have a feeling I'm going to own that company for a long time to go further in the future. I have no reason to sell it. It continues to perform year on year, and I think this is going to be a great compounder for me in the future. Not trading it. Not even thinking about trading it, although I was thinking about taking a trading position in Fiducian because the share price had turned positive. That's one thing I was thinking about, just holding my long-term position and then trading it, because there was a period where the share price pulled back. That's the weekly chart. You can see it pull back, and now the share price has moved back into an uptrend, and we had this little bit of a dip, seeing a bit of a dip, just like we saw back in March. So the chart looks better. Nice dividend yield, nice growth in this company, not that overvalued. I think it's a P ratio about 17, P ratio 17, dividend yield about 5%. It's just going to keep on growing, in my opinion, for the next 5, 10, who knows how many years. Okay, MAP says about half my portfolio consists of storage stocks. I'm happy with a 1 in 10 success rate. As a rule, free carry once a stock 10 folds, 10 bags. Is there any way to analyze this investing style apart from gambling? That is very much the capital venturists style of investing. They don't put all their money into the one idea or the one investment story or investment. They will put their money into many ones in the belief that by probability, one of those investments will hit pay dirt or hit gold. And the only problem I would have in story stocks is when people, and I've seen a lot of people do this, put all their money into the one story stock and hope it succeeds. I don't think that is the way to invest in story stocks. The way you're doing it is the way to do it. I think having many investments in story stocks is the way to go. I have tried that in the past, and I have been on occasion successful, but I just don't like that most of these story stocks just are crappy investments. So it's not for me, but I think the way you do it is the way to do it. It's a very much the capital venturist style of investing. I don't consider it, well, it's gambling in a way. Well, it's not really gambling. Well, it sort of is. I mean, there is a chance that all your story stocks won't make it. There is that chance. And then also trying to find which story stocks to invest in. But I think the way you're doing it is definitely the way. Definitely the way. That Showbiz says, great research. I really enjoy your videos. Very instructive and educational. Thank you very much. Kirat says, I'm really enjoying this series. Blah, blah, blah. What's your take on Neuren Pharmaceuticals? Okay, this is 9 days ago. Last 2 days, share price has jumped up with significant volume. AGM at the end of the month, if I'm not mistaken, loose lips. Maybe it was loose lips, not because of the AGM, because of something else. And the company is in a trading halt right now because of results of their phase 2 whatever it is, phase 2 something trial. And I have a feeling the market is expecting this to be quite positive. Top line results of its phase 2 clinical trial in Pitt Hopkins, which is a syndrome. And if we do have a look, probably won't see it here, but at the end of closing of trading yesterday, the indicative price was higher than the current share price, which is an indication, but not necessarily what will happen, is an indication that the market is positive in regards to these results. And you can see share price 21.71. There's only 2 people willing to sell the shares below that share price, but above 20.71, there is quite a few shareholders willing to buy. So that, again, that is indication that the market is bullish, but doesn't mean they are good results. We have to wait and see. And the good thing about it's only phase 2, by the way. I'd get more excited if it was phase 3. That's when I get excited. That's when I bought Neuren Pharmaceuticals, when they had a successful phase 3 trial, and that's when we saw share price appreciation in this company. That was back in end of 2021, if I remember correctly. So Neuren Pharmaceuticals was a storage stock, and in my opinion, what was it? Here it is. And in my opinion, this was the end of the story. This was when the company made it. This was their inflection point. Even though it wasn't financially or financials, this was their inflection point. The 7th of December 2021, share price on that day rallied 91%. People say, crazy buying a company when the share price has already rallied 91%. You've already missed it. I was told that. You've already missed it. Why? And this is why. I bought it $3. Share price now $20.71. That's why. It was the inflection point. And it can take a long time for the market to become aware of a company. No one talked about Neuren Pharmaceuticals for about a year after this. And I started to hear people talking about Neuren Pharmaceuticals when the share price got to about $15 to $20, not back then. So this is the benefit we have as individual investors. We can get in before the tide. So those results, what was it? I'm going to try to remember. I'm pretty sure it was successful phase 3 results, which means their deal with the Acadian was going to kick in, and it was a really good deal. So let's go back to December 7, 2021. This is a sort of announcement I'm always looking for. So let's go back. Oh, no, that's the wrong thing to do. Don't want to go all the way to the start. When was it? It was... Here it is. No. Wait. Here it is. Positive top-line results from phase 3 trial in Rett syndrome. That's when the share price rose to 91%. Top-line results. I'm just going to open up this announcement. So this is the phase 3. Very important. Doesn't mean FDA approval or anything like that. And I'm pretty sure they do mention how much they're going to earn. Yeah. Neuren would earn revenue for over 2022 and 2022 for Rett syndrome in the US alone of $111 million because of this deal with Acadian. So this was, for me, the making of Neuren Pharmaceuticals this day, December 7, 2021. You could have bought shares in this company at $3 on that day. And I have taken profits in this company along the way, but I do have a pretty big holding in Neuren Pharmaceuticals right now. And the chart, look at that chart, since then, looks pretty good. There have been period of times when there's been a little bit of, there was the shorter report against the company, but I don't care. I've taken my profits, definitely free holding, more than free holding really at this point in time. And okay, loving that videos, looking to, what are your thoughts on AVH? Looks like it's dropped below the resistance value and perhaps starting to trend down further. So AVH is Avita Medical. So this was 8 days ago. Oh yeah. This Oh yeah. Okay, Avita Medical. Couple of things about the chart, but why has the share price dropped? If I remember, it's another 6% on Friday, because wasn't that it was share price started dropping on the 11th of April. So around then, so it means we have to go to 3 months. Avita Medical updates expected first quarter 2024 revenue. The market didn't like what they saw. Share price has dropped, and it has continued to drop. Has dropped. In fact, it's halved. In fact, it's more than halved from the highs. Not long ago, the share price of this company was 560. Now it's 250. There's a nice little support level at around about $2.30. The reason that's a support level because of resistance back in 2022. Then it burst above that resistance on the 18th of January, 2023. Now it's back to those levels. The other thing to pay attention to is the volume. Massive volume coming in on that announcement on the 11th of April, and that massive volume has continued. That's a negative sign. We really want to see the volume drop as the share price drops further. That means there's less selling, less interest in selling, but we've seen maintained volume. Wouldn't be surprising to see the share price drop below 230, but I do think there is an argument to say that this company is starting to look good value, but it's not a profitable company. They're still burning through cash. So I'm not sure which way the share price is going to go. And you just see, look at the volatility in the share price over the past few years. So could be more for the share price to drop. And the one concerning thing I have is the volume. They're still selling. People are still selling out of Avita. Slide glide. Interesting to know, this is the 5-to-1. Interesting to know, all 5 companies had a market below $50 million 10 years ago. Some had a market below $2 million 10 years ago. This should give us an insight into whereabouts in the market right now we should be looking to find 10 baggers. Also noteworthy is the presence of founders, supply network, that zinc company, Advanced Zintech, I think it's called, and HIT. Yes, founders. I think it's very important. A lot of investors I do know, that's one of the keys they look for is founders, because usually their interests are aligned with shareholders' interests. Put it this way, if a founder has a 40% of their wealth, actually not 40% of their wealth, if they own 40% of shares in the company, more than likely all their wealth is in the company, they don't want that company to fail, because if the company fails, their wealth is destroyed. Compare that to, say, management who have none of their wealth in the company. In the end, do they really care? Probably not. Not as much as that founder-led person who has all their wealth in the company. And that is why a lot of investors look for founder-led companies, because interests are aligned all over the place. So Supply Network is one company I wish I bought. Still not a shareholder in that company. Anyway, can you have a look at CHN, which is Chalice Mining? Chalice Mining. It does look, this Chalice Mining is starting to turn around. The sentiment in this company is starting to turn from highly negative to maybe positive. And I remember this was like a market darling. Here it is. Look at this. I still remember Chalice Mining breaking out on the 23rd of March 2020. It was almost at the COVID-19 lows, wasn't it? Sometime around then. Share price went from, you could have bought this company on the breakout at below 40 cents. Share price went all the way up to $9 and a beautiful uptrend. And then probably, if I was holding this or trading this, I probably would have sold out somewhere here, because I think that uptrend definitely came to an end somewhere there. And then it went into a downtrend. Well, it's all over the place here. And then went to long-term. I'm not sure what happened. Something bad happened on the 30th of August 2023. Share price on that day dropped 25%. And really, if you were holding shares at that point in time, not sure why, because the share price before that was in a downtrend. And this is an exploring company, by the way. I'm pretty sure it is. That was the trigger to get out, because look at that. Massive negative sentiment. But I think that sentiment is starting to shift. I'm pretty sure this is a gold exploring company. It tells a market cap of 667 million. And the only reason I would trade this would be the chart. And it does look like a couple of high highs. So I think the trend is changing and the sentiment maybe is changing for Chalice Mining, which probably makes sense because, again, gold. Chalice Mining. Take a look at AGC and SXG, mate. Yes, SXG is Southern Cross Gold. Definitely, I'm taking a look at this one. Share price has dipped. This is a possible buy the dip situation for Southern Cross Gold. We've had a few buy the dip situations. This could be another one. Chart looks absolutely brilliant. That's all I know about the company. I just saw the chart of this company and went, this looks really good. Really nice chart for Southern Cross. I'm pretty sure this is in my Buy Australia watch list. Doesn't mean I'm going to buy it, just means I look at this chart more than, not more than, I look at this chart once a day, and what I've been looking for is a little bit of dip. And we've seen that dip. I'm pretty sure this company did a capital raising as well. Capital raising? Maybe, no, maybe not. Might be thinking of another company. And what's the other one you talked about? AGC. Oh, yeah, I know this one as well because Australian gold and copper. Well, it's got the two big words in it, gold and copper. And the chart just looks, yeah, I would be out of this. I wouldn't even be in this right now. It's gone up way too rapidly. It could drop 50% from here. Yeah, it could drop. It could. I don't know. I don't trade these sort of setups. It's just gone way too hard too quickly. But if you were a shareholder, I'd probably be very happy. Thank you, DFEKT, Australian Gold and Copper, and Southern Cross Gold. Please include tickers. Well, try to. Sometimes I forget. I'm an old man, and I sometimes forget. Anyone like Magnetite Mines? So funny. Please include tickers, and the comment above does not include a ticker. There you go. And all you have to do is go Magnetite Mines, MGT. I know nothing about this company, by the way, so I'm assuming this is a mining exploring company. A lot of mining exploring companies, no receipts, so straight away, because no receipts and I don't know anything about the company, all I'm going to have a look at is the chart. MGT. And, okay. Chart was looking really negative. You can see the little run-ups in the chart back in October, November last year. They both failed. So we did see some bigger volume in that second run-up. So that could be a sign that things are starting to turn around, but then the volume started to dry up, but not completely. We started to see little spikes in volume. So someone's building a position. And why is that important? Look at the volume during this period from November through to now, but compare that to the volume from March last year all the way through to October. Really low volume. That's what you should see when the share price is going or is in a downtrend. Really low volume. And then you start to see volume pick up. That could be a sign that the bottom has been reached. And now we started to see a bit of a shift in the share price. Share price is starting to turn on some good volume days as well. So sentiment in this company is starting to shift positive. But again, it's an exploring company. And I preferably do like to stay out of these companies. Markup is only 37.9 million, but whatever floats your boat. That's just me. I am trying to stay out of these more speculative story stocks. Magnetite Mines. Does anyone else like Magnetite Mines? Dickie Nee wants to know. Isn't that the Saturday, Hey Saturday? Dickie Nee? I don't know. Blacktop Images. Studying ABX Group with a significant rare earths discoveries and diversified sectors seem like a good investment at the current price of 0.5 cents. Or is that 5 cents? But I can't help but think with so many buying in at much higher prices, if when the share price does rally up, there will be so much pressure from current shareholders sending out it would see the share price struggle to reach its realized potential. Is this a possibility? I'd say it's a good possibility. Just by what you're explaining. So ABX, again, I don't know anything about this company, so I'm just going to have a look at the chart. I'm assuming this is just an exploring company, and the share price is 5.2 cents. And I would not, I wouldn't even be thinking about even thinking about taking investment in this company at this point in time, just because of the chart. And you're absolutely right. All these shareholders have bought at high prices. So someone bought at 20 cents not long ago, or 2 years ago. And if they're still holding, they're down 75%. They're highly in the red. And as soon as the share price tries to rally, all these shareholders who bought at high prices just have to sell out of this dog stock. Now, it may not be a dog stock, but they don't think that. Because the share price has dropped, they want to get out of this dog stock. And that's the mentality of a lot of investors. If the share price falls immediately, they need to get out. no matter what happens. I have heard this from people I work with, who I would not call, I would not classify these as good investors because of what they told me. They said, I bought some shares in this company, share price has dropped, and as soon as the share price gets back up to where I bought, I'm going to sell. And I was like, is that the right mentality to have? And that is the mentality of a lot of investors. So that's the problem ABX Group has moving forward. The one thing to get around that, well, this company can do, is to release a really good announcement and to get a lot of demand in shares, and that demand meets that supply. That's why you need to see really good volume for when there is a turnaround. And have a look at the volume, really low volume, and just have a look at the volume back in February, March last year. Oh, no, not last year, 2022. Some really good volume during that period, and that volume's just dried up. There's just no interest in this company right now. So yeah, I think the ABX will struggle unless they release a really good announcement. Skis, I feel stupid when I bought Supply Networks about 1.5 years ago. Felt like I was buying top. Turned out to be a good buy. Yep. Yeah. I don't get jealous much. In fact, I don't get jealous at all, and I'm a smidgen jealous. I've held RCL starting 2018. Oh, this is Readcloud. Its trading volume yesterday was $2,000. I don't know how to value stocks that are so illiquid. Yes. Now, illiquid companies, there are opportunities. A lot of people don't know this. There's opportunities. Because they're illiquidly traded, there are opportunities. Because people don't know this. There were some very big companies right now that were illiquidly traded not long ago, maybe 10 years ago. And as the company proves what they're doing is a viable business model, they improve or increase profits, increase revenue, that liquidity builds up, increases, and that's what you want to see. I'm not sure if Readcloud is moving towards that, but possibly it will. Now, talking about Supply Network, I'm pretty sure Supply Network fits into this group. I would say the liquidity is probably okay now, but if you go back a few years, the liquidity in Supply Network was shocking. So we're going back even to 2020. Just by looking at this chart, liquidity in Supply Network was really bad, and that liquidity has improved. I'm not sure if it's absolutely perfect now, but it's definitely improving. You can see just by the chart how it's improved. So don't be scared buying companies with low liquidity. So let's have a look at the last trading day for Supply Networks. 106,000 shares traded, 94 trades, which I wouldn't say is liquid. The value of those trades was $2 million. So Supply Networks has become liquidity traded because it's proven, they've proven what they're doing is working, and the share price has increased, chart looks brilliant, liquidity's improved, fund managers are becoming interested, so everything's turning positive for Supply Network. It could happen to Readcloud, but maybe not. But on the flip side, one bad announcement from the company, and the share price could drop 20 or 30%. I don't think it will, but it could. And I more than likely would want to hold illiquid stocks for a longer time. I wouldn't want to trade. I am trading illiquidly traded stocks, and I don't think that is the best strategy. It's just something I'm doing right now. And actually, they're working. My illiquidly traded stocks are actually doing really well. And even when the whole market's down 1%, some of these companies are up 2 or 3% in one day. So it seems like there is a distortion, not distortion. These companies don't care, and people who buy these companies or trading these companies don't care about what the overall market is doing. That's another thing I like about these illiquidly traded stocks. But on the again, yeah. Mayfield Group, someone says, Hutcho bought $10,000 worth at 79 cents. And this is one of those illiquidly traded companies that I think is illiquidly traded right now. Bought 78 cents, share price is 80 cents. And I think this has the potential, and I did not know this company existed until someone just mentioned it. And this is another company that I think over time, you will see the liquidity increase significantly, particularly if they increase profits, increase cash flows. And if that happens, the share price won't be 78 cents. The share price might be like $3, $3.50, $4, $5, or like Supply Network. It's increased from, it's been a 10-bagger, increased from $2 up to above $20. That could happen to Mayfield Group. Doesn't necessarily mean it will. But again, this is in my trading portfolio, and I plan or hope to own this for like 5 or 10 years. And that's the key. I want to own some companies in my trading portfolio for multiple years. So let's hot show. Okay. AU is talking about A1 Mines or A1 AIC Mines is a copper producer currently producing. Oh, it's talking about what it does. Okay. So I don't know a lot about AIC, but this is the company that did a capital raising. Now I remember they did a capital raising and the share price just fell on the back of the capital raising. And this could be the buy the dip situation. I think I was talking about another Southern Cross Gold. Now this was the buy the dip. Just look at the volume. Look at the volume. So share price in a downtrend. Low volume. Volume starting to pick up. So this is one thing I am studying more and more is just the volumes. One thing to look at is maybe just the volume. When you see the volume starting to pick up, that's the time to become interested. And the volume has remained high for this company over the past past 2 months. And it's just they're in copper and gold, I think. You do mostly copper, maybe not a lot of gold, but definitely copper. Obviously, and he says, yeah, AU is right. Obviously, the copper price needs to stay elevated. And that is a problem with mining companies. When these mining companies go on a run because of the underlying commodity going on a run, the underlying commodity needs to keep on going on a run. That's the problem with mining companies. That's the big problem I have, always have had. That's why I would never say any mining company is a high quality company because they're beholden to the commodity price. Okay, Kasasana, Dimerix had a good day, end of the week, up 10% on the day, finished at 37.5, just exuberance, or get on board. The train's leaving the station, maybe announcement next week. So 37.5 cents. So this is 7 days ago. And this is another one. This is a story stock that I did buy, but this had similar vibes to Neuren Pharmaceuticals. A little bit behind Neuren Pharmaceuticals, but similar vibes. This is when I discovered Dimerix. Actually, that's not true. I discovered Dimerix back here, 2020. Share price of Dimerix fell in one day by 62%. That's when I discovered it, and then I didn't pay any attention to it because when a share price falls 62%, I have no interest. Just like if a share price rises 62% in one day, I do have interest, unless it's a mining exploring company. But that's a different story. But then they released something, I forget what, it was positive results or something on the 5th of October. Maybe it was a deal. DXB, 37.5 cents, 34 cents. It's not negative. Just because the share price is down from 37.5 cents doesn't mean that's negative. It just could be a little bit of a dip. No, I don't want to look at charts. I want to look at the announcement on the 5th of October. I just remember reading this announcement and thinking, what was it, 5th of October? Oh, I can't remember again. I just lost my memory there. 5th of October, I was right. Oh, it's a license agreement. Yeah, license agreement. And I remember opening this up and going, oh, this has similar vibes to Neuren Pharmaceuticals. Not quite as good, but similar vibes. So they're going to receive a lot of upfront money, milestone payments, and then also tiered royalties. My Neuren Pharmaceuticals vibes ring up. But this is a little bit further back behind Neuren Pharmaceuticals where they were. But the market liked it, and just because the market liked it, really good volume coming in. I took a trading position in this company when we did see a dip. It wasn't this dip, it was a dip here. I bought some shares at 18 cents on this dip here. It was a good dip buy or buy the dip situation, and probably one of my best buy the dip situations. And then I took profits somewhere here. So I'm still holding a position in Dimerix. Didn't completely sell out. But it's a story stock, and because it's a story stock and my trade did play out fairly well, I decided just to take profits. So you can argue that was a bad decision all you want, but that's what I decided. And I'm free carrying this company right now. So share price could keep going up. And even though share price is a little bit lower than 37.5 cents, again, it's just a little bit of a dip. We've seen plenty of dips as the share price keeps going up. Now, one thing you could say or research is on these dips, is volume decreasing? That's what you want to see, decreasing volume. So here, this period between 13th of March in the 9th of April, when the share price did dip, volume decreased. And then as the share price started to rally, we saw a bit of an increase in volume. That's exactly what you want to see. And this little bit of a dip, volume has decreased again. So Dimerix looks pretty good. No complaints I have. MMC, ASX Gold and Silver Junior Stock. Did I mention MMC? Is this Memoran? Marsh and McLennan Companies, New York Stock Exchange. There you go. Mitre Mining, that's right. Mitre Mining. Yeah, the chart looks pretty good. This chart looks stellar. I'm assuming this is a gold exploring company. I could be making bad assumptions. Gold or copper. They mentioned gold in TradingView. And again, look at the chart, look at the volume. Notice the volume started expanding a little bit before the share price broke out. That could be a sign again. I have heard this mentioned a few times, that sometimes volume precedes price action. And it looks like this happened with Mitre Mining back in February. The high volume started coming in late January. Share price didn't take off until a few weeks later and maintained high volume. And again, look at the volume when the share price dips. Decreased volume here, decreased volume on these 2 down days, decreased volume on these 2 down days. So yeah, it all works out pretty well. Thoughts on APA and ALD? Oh, APA did enter my watch list. So this is an infrastructure play. I'm pretty sure they do gas infrastructure, something like that. And yeah, this just came onto my radar because it does look like potentially the trend is trying to shift positive. I wouldn't confirm it just yet, but I think it's potentially moving in that direction. So that's APA. And ALD is Ampol. ALD, yeah, Ampol. And share price has dropped a fair bit. Did they release something negative recently? ALD. Let's have a look. The last announcement was a trading update on the 30th of April. 30th of April. That's just it. Yeah, it was negative. Down 3.3% in one day. Doesn't seem like much, but that was a little bit of negative, a negative announcement, and the share price has dipped on that. And share price really doing nothing much now. Ampol, I wouldn't say I'm the biggest fan. It says dividend yield is 7.8%. That's pretty nice. So if you like that dividend yield, why not? I'm going to 6 days of this, 6 days. So Animal Spirit will be the last one. And then I'll go to those 3 comments left by Darren, was it? Hey, Kneppy, keep up the good work. What do you think of Nanosonics at 282? I think it's a buying opportunity at the moment. I am a shareholder of Nanosonics, and I have no intentions of selling. That's me. And the chart, and this is a long-term hold, by the way. So the chart, they did release negative results in January, or negative something in January. I think it was an update. The share price has gone sideways since then. So that's actually a good sign. They released something negative, share price has gone sideways. So all the negativity has been priced in. And the market doesn't think the company will release anything negative moving forward, because if the market was thinking that, the share price would be still in a downtrend or decreasing further. Still in a downtrend, but that's the main reason why I haven't sold out. And I do think this company has significant potential growth moving forward as they expand their offerings. I'd say it's still a 1-product company, but I think eventually they'll become a 2-product, 3-product company. But that's many years in the future. And finally, we'll go to these 3 comments by Darren. We'll start with the first one. So I'm going to like these just so I know that I've answered them. And yeah, these are long comments. That's my one problem with this. Doesn't appear your capital allocation is correct. So I did read this, and look, I am on a learning curve. And at the moment, I'm happy with my 60% return trading. And I understand what this person is talking about, capital allocation and risk what he's talking about here is something to think about in the future, but not right now for me. And I'm still trying to get my head around what exactly he's saying here. So capital allocation equals total capital valued in market plus cash on hand at the time the decision is made to buy into a company. Total capital in the market as of today, $500,000 cash on hand equals $500,000. Total capital to invest in Nuix equals $1 million. Nuix must trade daily daily over 200,000 to allocate 2% of total capital with risk of no greater than 0.4%. So Nuix has traded over, on average, over the past 3 months of 980,000. So 2%. So straight away, he's talking about liquidity here. At this point in time, I don't care completely about liquidity, but I do understand why some people need liquidity, particularly if they are trading or have a low risk tolerance or whatever. Blah, blah, blah. So keep going on here. So Nuix, since your purchase, has traded intraday of high of 318, so stop loss adjusted to 254. You're still investing trading in 2 illiquid companies. It will bite you eventually. Mayfield Group has traded on average over the past 3 months of just over 5,000 per day. No trade. That's your strategy. At this point in time, it's not my strategy. Maybe it will bite me in the future. Possibly it's true. I can envisage that happening. But at this point in time, trading in liquid companies is actually working really well for me. So I think there is a lot of ways to trade. There is not one way to trade. And I think a lot of people don't understand that. You don't need to trade one way. And if there are traders not trading these illiquidity traded companies, that's okay. Because my philosophy on some of these illiquidity traded companies is they're really good value right now. And there is a chance, if they grow and significantly grow over the next 5 years, the share price of these companies will be significantly higher. So even though I am trading these companies, I'm technically not trading them, and I do have a really long leash on these companies. In fact, I do look at the charts of these companies on a daily basis, but because I have a really long leash, they could have, or share price drop a little bit, and we have seen Mayfield Group share price drop a fair bit. I'll have a look at the chart for Mayfield Group. So it's a nice little rally. Share price has dropped. It's sort of a bit of a dip in the share price. But I just think this company is undervalued with the potential growth moving forward. And I have no stop loss for Mayfield Group just now because I have this really long leash on this company. Even if the share price drops to 50 cents, I'd be okay with that because this is a long-term play. So ideally, it doesn't belong in my trading portfolio, but I'm only going to have 2 portfolios. A high-quality portfolio, so high-quality companies for the long term, and then a trading portfolio. And I've combined my small caps and my trading portfolio into the 2. I will be doing that anyway over time. So any purchase I make has to fit into these 2 portfolios. And Mayfield Group is not high quality, so it's more trading right now. But even though I don't have, or I do have a long leash, it's not a leash like I have with my high-quality companies. In fact, some of those companies I have no leash. I don't care. I'm going to hold those companies 5-10 years. I can't say that with Mayfield Group because if they do release something negative, I will sell. But at this point in time, this company has some tailwinds behind it. They've already mentioned tailwinds. So I think there is potential. What we'll see over the next 5 years with this company become more and more well-known. Fund managers will start talking about it. We'll see this company pop up on AusBusiness Call more and more, and the share price could improve. More than likely will improve. That's my thesis. And liquidity will improve over time, just like with supply networks. So anyway, it is, what else you've mentioned here is capital allocation. That is something I have, I am reading about right now, how to correctly allocate or risks, whatever it's called. So definitely something to think about what you've mentioned, but I just did the trading too many illiquid companies. I think it's only 4 or 5 I have. It's not many. That's not many at all. Next on to his other comment. Your trading account performance will now be in triple digits and not 60% if you stop dabbling in mining companies where they have no influence over the underlying commodity. So there is a point, a really good point there. You also have no edge. No mining, no agricultural stocks, no private health companies being tampered with by governments, and no insurance companies relying on passive weather patterns, triple-digit returns. Well, I'm not sure. Yeah, no agricultural companies. Yes, I agree with that. I have made a few trades with agricultural companies and they haven't worked all that well. No private health companies. I don't think I've invested any of those. On occasion, I will. If I think there is a bit of a nice trend in the share price. No insurance companies. No, I've not invested in any insurance companies. Now, I will push back on mining companies. I actually have done really well on mining companies. South 32, very well on that. Fortescue, done really well on that. right now, base resources, done really well on this one. Done really well on base resources. Bought in at, there it is, 18.5 cents. Share price is 28.5 cents. Now that was an opportunistic arbitrage take when I just realized that when this company was being taken over, the market didn't realize the full magnitude of this takeover, and I didn't realize why the share price was 18.5 cents. I went, oh, 18.5 cents. Yes, I'm going to buy that. And you can see what the share price has done since then. And share price is going up to the level of the takeover bid. Now, on the flip side, one of the things I have done is trading, I would say, mining exploring companies. And I have already mentioned, and story stocks as well. So mining, well, just story stocks. So mining exploring companies fit into story stocks. I am now getting away from story stocks. That is the one thing I have moved, but not mining companies. And I've done really well in big mining companies. That's probably what I should say. So big mining companies, I've done really well, particularly at the bottom of the cycle. That's when I've done really well on no mining or mining companies. So I would say no mining companies is too much of an absolute. Now, some of these other ones, yeah, I am now thinking staying completely away from agricultural companies. I've always stipulated staying completely away from insurance companies. Private health companies, yeah. ABX Group, good decision. Buy Nuix, yeah. GDC, WiseTech, yeah, these are all good ones. Yes. Took a position in Red Docs just the other day. Yeah, I still think, yeah. There are some things to think about. If I completely stayed away from mining companies, would I get 100%? Probably not, because I did have a look at my returns through ShareSite, and I have had some good returns from mining companies, but my worst returning companies have not been mining companies. Have not been mining companies. It's been a little bit too early to the party. DGL is a good example. I thought things were turning around and I was a little bit too early there. But that's one thing that has worked well for me. Getting a little bit too early, maybe I shouldn't say too early, but getting a little bit early to the party, it has actually worked well for me, except once. Other than that, other than DGL, I can't say any of my trades have been bad apart from selling too soon. That's my biggest weakness. Biggest weakness is selling too soon. And a great example of that is A2 Mill. Another example of that could be Hub 24. Possibly another example of that will be Bravura, Judo Capital, and what's the other one I sold? And Service Stream. I hit the sell trigger possibly a little too soon. That's the thing I've got to work on, not investing in no mining companies, and definitely not in capital allocation. I just have to work on myself and not selling too soon. Not surprised you have not looked at MetaVisor. I definitely have looked at MetaVisor. I'm pretty sure I've featured MetaVisor in at least one video. Maybe not featured it, but definitely have looked at it. I'm not going to go through all that. Talking about when I should buy, or what price I should, how much I should buy. And it just seems like that's just too much work. Just seems like that's way too much work. And I've noticed, another thing I noticed was if I do loss, a fairly big loss. Didn't notice that. There was a really big loss if it doesn't go my way. What's a 4,000 loss if it doesn't go my way? That seems like excessive. Maybe I'm reading it wrong. It just seems like a lot of work what you're talking about there, Darren. Lots of work. And to be honest with you, 60% return, I am doing something right. I'm making all these mistakes, selling too soon. Some of my story stocks have not gone well for me. But if I can get rid of all those little mistakes and work better on moving myself in my trading philosophy moving forward, I definitely can increase that to 60%. So I think these are good constructive criticisms, but maybe at this point in time, in my trading journey, these are not quite for me just yet. Maybe in a few years, I could work what you're saying into my trading philosophy. But at this point in time, not just now. But I do understand where you are coming from. So thank you for your comments, Darren. I think these are sort of comments that I really do appreciate, because eventually, maybe I'll look, maybe 2 or 3 years, I'll look back on these comments and say, this was the trigger, or these were the trigger to really fully explore on how I'm trading. But I do have a problem with saying if I didn't trade in mining companies, I'd be at triple digits. No, it's not true. So that's all I've got for today's video. What I think I might do is, yeah, still got a lot to do. What I might do is I will reply to all these comments and put this video in the reply section so you know exactly which video you have to look at. Maybe that's what I should do moving forward. So that's all I got for today's video. Have a good day. Have a good weekend. And maybe the last thing I should say is I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.